Thank you, Nina, and good morning, everybody. We welcome you to this morning's webinar on PP loan forgiveness and the updates therein. Looking forward to a great webinar. So we really appreciate your participation this morning. It is my privilege and pleasure to first introduce our sponsor, our great sponsor for this morning's webinar, and that's Doug Burke of the Burke Motor Group in Cape May Courthouse. We appreciate Doug's sponsorship today, and Doug just has a few words for us. So Doug, you can take it away.
Thank you, John. Good morning, everybody. Again, thank you for the opportunity to sponsor today's webinar. It's very timely. I think we've all been following the PPP closely. Lou was on with us a few weeks back, but obviously there's even been changes since then. So very timely. From a sponsorship standpoint, yeah, I mean, it's really, for me, it was about getting the word out to the membership that these sponsorship opportunities are available. So please, for your businesses, look into sponsoring. Here at Burke Motor Group, we've been able to maintain being open throughout this. We're now fully open. Our showrooms are open, back in business of selling and servicing cars. So if you have any questions or needs, please reach out to me. But more than anything, these sponsorships allow us to keep going. We have a great team at the Chamber, as everyone on this call knows, Vicki and John and Nina. So these sponsorships allow us to stay in business, so to speak, and to keep them going. So please contact John for any sponsorship opportunities, as we have a lot of great webinars. So without any further ado, we have a great lineup today, like I said, to talk about the PPP and some of the changes. Sheryl Paynter is here with us. Sheryl is the lead lender relations specialist and lead economic development specialist for the SBA, New Jersey District Office. Sheryl's been with the SBA since 2009, and responsibilities include marketing the SBA's guaranteed program to banks, assisting banks with administering the SBA's programs, and educating the local community about the resources and services available through the SBA. So Sheryl, I'm sure you've been really busy these last few months. With that, I'm going to turn the program over to you, and thank you for being here with us today.
Great, happy to be here. Am I live? Hopefully.
Mm-hmm. You're live.
Yep. All right, cool. Yeah, it is just, yeah, it's great to be able to help to get the word out. What I want to talk about today is pretty much the basic guidance on PPP forgiveness. And I want to remind everyone that detailed guidance can be found at treasury.gov. And once you click there, you will see for small businesses, the assistance relief. And once you click in there, it is very user-friendly on the different guidances that are very detailed. The SBA.gov/coronavirus also has detailed information. So, and my email address will be at the end of this presentation for follow-up as well. So let's get right into why you're here today. Let's see, application window. Okay, share, view, slideshow from beginning. Can everyone see the screen?
Yep, yeah. Looks like it's up, Sheryl.
Yeah. Yay, okay. So this presentation, as I said, is only an introduction, and you should personally review the documents yourself. And I want to start with, if you're having trouble and looking where to go, I want to point out that through the SBA, the official resource partners of the SBA, of course, there's other partners out there, but the Small Business Development Centers, SCORE, and the Women's Business Centers all offer free business counseling. So if you're having trouble going through your application, and more importantly, if you're having trouble getting your business back up to speed and are looking for business counseling on how to create a business plan to do that, I encourage you to go to these resources. Money's actually been given from the SBA to the NJEDA, which is the Economic Development Authority, who has included these 3 resource partners along with others to provide free technical assistance. So if you're really drowning out there, please consider these as sources for assistance. And what I'll do is I'm going to send this presentation out to Vicki and Nina for dissemination. So I've put other links that I thought you would find helpful. So there's key changes that have occurred within the first PPP. Originally, the 8-week was extended last week from 8 weeks a borrower can choose, or they can choose a 24-week option to have their PPP loan forgiven, meaning that they have spent the money and then would apply to their lender for forgiveness of that. And it's 24 weeks or December 31st, 2020, whichever comes first. And last week, there was a new requirement. It originally had to be that 75% of the borrower's loan proceeds had to be used, but now it's 60%. The rest of the PPP money can be used for business, rent, utilities, mortgage or interest payments would be the other part of that the loan could be used for. But if a borrower uses that 60%, the whole loan can be forgiven. If they use a partial, like 55%, then 55% would be forgiven and the rest would be turned into a loan. That's kind of how that nuance works. And it provides a safe harbor. So what basically happens is if a borrower has tried to get employees back and the employees have refused to come back to work, then the reduction in forgiveness based on your employees being reduced does not apply to that borrower. You have to get a written offer of employment to that individual to prove that you did offer people employment that were that refused, because we have been hearing that with that stimulus money, people are not coming back to work as they should. Not all, but some. And I also encourage you to go to the newjersey.gov/Department of Labor, DOL website to find other requirements that are not federal, but state as it relates to unemployment. And I just mentioned the key change of number 4 about the safe harbor. And it also increases to 5 years. So if you have a portion of that business loan that is not forgiven and gets turned into an actual loan, if you applied after June 5th, then that loan automatically becomes a 5-year loan in which you would have to repay that unforgivable money. However, if you applied before June 5th, you can't very well tell a lender who's already given you a loan that they have to amortize it for the 5 years, because when the loan was originally closed, it was 2 years. So you would need to negotiate with your lender to extend it from 2 out to a maximum of 5 years with the lender's approval. And let's see. It extended, last week's rule extended the deferral period, that it would be 10 months for it to become a loan. And then it removed the restriction. This is just a very technical of removing the restriction of participating in the deferment of Social Security payroll tax. And this is really meant for your accountant to utilize. Okay. And basically how you're applying is you would be applying through your lender. The lender is the one who works with the SBA to get that loan forgiven. I know Lou is going to actually show the application, but I'm just giving the highlights of what the application will contain. It will contain the calculation. It will contain a certification. He's going to talk about Schedule A, I believe, as well as your demographics and other instructions. There is an easy form that individuals who do not have employees or self-employed or did not reduce can utilize. And in that form, there is more detailed guidance on if you can use the form or not. One thing I really want to give a plug on is in my free time over the weekend, I actually met 3 different individuals who were self-employed and did not have employees. And they actually didn't know that they were eligible for PPP loans. As long as you are self-employed and you fill out a K-1, which you submit for your taxes, there's a methodology on how to calculate what you are eligible for a PPP loan. So I'd like to take this opportunity to state this because, again, along my travels over the weekend, I stumbled upon 3 individuals that I pushed to go apply for a loan. So I was really surprised about that. Payroll costs, again, this is very busy and it's meant more to be used for reference materials that I will forward over to Nina and Vicki. But basically, it's pretty much all you utilize for your payroll costs. And you have to subtract a 1099 employee, a contractor, as they are eligible to apply on their own. We talked about that. And basically going into what I've already explained about mortgage and rent or utility payments, how to exactly define that. And that is my portion of the presentation. And I'm going to stop sharing and hope that worked. Did that work?
It did.
And,
okay. So I think I'm supposed to turn this over to Lou. Is that correct? Or
Cheryl, I'll take it from here if you like. This is John Kelly
Sure.
from the Chamber again. We do have a couple questions, if you would want to take those now.
Sure.
From the Cape May County Herald, it says, for safe harbor purposes, if a particular employee does not return by 6:30, either voluntarily or involuntarily, can that person be replaced with another person as long as the head count and full-time employees are the same?
Absolutely. Absolutely.
Okay.
So it's tied to the number of individuals. It's not tied to the individual. So that's a very good question.
And then one more from Jay Sabella. It says, I've seen that the 60% requirement is cliff spending. In other words, if you do not spend at least 60% on payroll, none of the proceeds are forgiven. Or if only 55% were spent, is 55% forgiven?
Yeah, so it's the latter. It's not a cliff. That was clarified in the rule last week as well. The portion that you utilize for payroll is forgiven. Remember that the calculation of how much you receive hasn't changed. It's just really extended the from 8 weeks to 24, that same amount. So it's really supposed to help businesses that were not able to reopen, who are now reopening, get that extra time to spend the money. But again, if you utilize 55% on payroll, you get 55% forgiven.
Okay, and we had a couple more pop up here from Joan. If your business is still shut down by the government, for instance, a theater, and payroll has not been increased to full-time because employees are not working full-time, will the part-time payroll still be forgiven?
So there is a methodology, and I'd be happy to share the link, in which you convert part-time employees to full-time equivalents. So you would still be eligible for forgiveness on the portion that was spent on payroll. So you're basically converting part-time employees to full-time equivalents.
Nina, it looks like we have a couple more questions, but I'm wondering if we should get Lou started and then circle back. What's your preference for questions?
I think that would be okay. Maybe what Lou has to say will help some folks with questions, and if not, then we'll definitely follow up with them at the end.
Okay, then at this point, it's my pleasure to introduce Lou Bongiovanni from Fitzpatrick, Bongiovanni and Kelly CPAs, a man who probably needs no introduction, but I'm happy to do so. Lou, it's great to have you back, and we're ready for your side of the presentation.
Okay, great, John. Thank you. Let me just here grab the screen. Okay. Can you guys see that?
Yes.
Yeah, okay. Great. First of all, thank you for having me back. It's great having a resource such as Sheryl here, who has an abundance of information, and not sure what she was able to cover. So I'm going to kind of skip over some parts of my presentation because Sheryl did such a nice job covering it, and that'll allow me time to cover other aspects of what I think people want to hear. So what I was going to cover is some significant changes. Again, Sheryl hit most of them. There's only a couple I wanted to re-emphasize because I think it's worth it based on the questions that I get. I just want to point out the revisions to 3508. Last time I was on, we looked at it initially. There's been some changes in light of the latest updates. The Flexibility Act had impacted changes there. Now this easy application as well. And then talk a little bit about an updated financial tool. I had shared one with you last time. A lot of people had asked for it online, which was offline from this, and I was glad to forward it to them, and I'll be glad to do it again if you want to email me and ask for it again. But now with this 24-week extension, it allows some opportunities that I want to point out that might be obvious to some people, but not for others, and then leave us some time for Q&A there. So, so as far as the update here, there's a number of things we want to talk about here. And again, I'm going to race through a few of these because Sheryl's already covered them. The Form 3508 Easy, it was put into place primarily so that you would limit the amount of documentation that has to be supported as far as the calculation. So the easy part is not making any changes to the requirement of law. It really just limits how much documentation you have to submit because it's a two-stage process, right? You have first the banks that have to approve the loan forgiveness calculation, and then it has to go to the SBA. So two-step process, 2 lines, so to speak, that you have to wade into before you get a final determination. And they're trying to streamline the process. And what they said is if you fall within these stipulations, it's a couple of things here. If you're self-employed or independent contractor or sole proprietor with no employees, and it include any salaries there, you can use this form. Or if you didn't reduce your workforce by more than the 25% stipulation compared to the covered period, you can use this form. And then one of two things had to happen here: that you did not reduce not only the number of hours, but the number of employees by that 25%. That's another stipulation. And you were unable to operate at the same level as you did on February 15th. Sheryl alluded to that as well. So there's a couple of stipulations here where you can use this easy. And again, I'm going through it rather quickly, but take a look at it. If you fall within that, obviously use the easy. Less documentation, you streamline the process. That's real important. Sheryl mentioned the covered period was extended 24 weeks. That was huge for a lot of people, especially in Cape May County, that weren't even opened or just barely opened during that 8-week window. This provides you a lot more opportunity to have the loan forgiven, and that's really the spirit of the whole legislation. They want to try as best they can to get as much of the loan forgiven. So I'll show you in the extended spreadsheet that you're now able to do that, although there's a couple of questions that I'll hit in a second with it. The payroll cost goes down from 75 to 60%. Sheryl mentioned that. The rehire was mentioned already as well, and the exemption. A couple of more safe harbors as far as getting to FTEs. One question that I'm getting often is you can either do the 8 weeks or up to 24 weeks. And that's important because the literature is not really clear on that, although Sheryl mentioned there's something that came out just as recently as yesterday that clarified it a little better. So if you couldn't do it in 8 weeks, and let's say it takes you 12 weeks to do it, you do not have to wait until the 24 weeks is done in order to get the paperwork and submit it to the banks for loan forgiveness approval. You can do it once you've satisfied the stipulation there to get the loan 100% forgiven. So that's important. I'm getting that question a lot. However, if you do elect to do the 24-week, then you have additional time, not only for your employees to do it, but also for the owners. And I'll get to that limitation in a second here. So if you do the 8 weeks, you have to stay within the 8-week parameter. You have to have your workforce reestablished still by June 30th. If you do the 24 months, then, the 24 weeks, then you can do it as of December 31st of 2020. So depending on what period of time, you can still do the 8 weeks, and those 8-week rules didn't change much, but the 24 weeks is the new one, and those rules have been expanded and are much more liberal. So if there was any chance of you not getting it all forgiven in 8 weeks, the 24 weeks should pretty much handle a far majority of it. One thing Sheryl mentioned, and I think it's really noteworthy, is that whole going from 1 year to from 2 years to 5-year extension as far as the period of time that it gets repaid. Many people are going to say, oh, it's 5 years, but no, it's only 5 years if you applied after June 5th. That is sometimes being lost in the translation there. So if you do have a portion that's not forgiven, realize that if you're one of the earlier adopters, and this is one of those situations that the early adopters here, the early applicants, really didn't get as sweet of a deal as the late ones did. But for those of you who still have a very vivid memory of how anxious you were waiting for the second wave, assuming you missed the first one, it was probably worth the fact that you're not getting these other benefits or perks in it. Just getting the loan at that time was worthwhile because it was a very stressful period for many people. I know that. this is the part I want to spend just a couple of seconds on, because I think it's important. And Sheryl didn't get to this granular detail here, but I think it's important. So under 8 weeks, as you know, if you were an owner or a partner or a shareholder of a corp, you were limited up to 100,000 during 8 weeks. That was 15,385. It's 100,000 a year. The question was, well, what about if it's 24 weeks? Does it extend it beyond that? It does to 24 weeks to 46,154 only if you're a non-owner. If you're an owner, I'm going to address that in a second here. So if you're a non-owner and you have an employee who makes 100,000 or more a year, under the 8 weeks, you could only include 15,000. But under 24 weeks, you can include 46,000. If you need it, it's there now for you to take advantage of it. However, if you are an owner or self-employed or corporation or partner, the question is, well, what happens there? You're limited to 15,384. We know that under the 8 weeks, but under 24 weeks, what is it? And you are capped at 20,833 if you make over $100,000. Okay, so it doesn't go to 46,000 if you're an owner. You are capped at 20,000. I'm getting this question all the time here with it. So that is the new guidance. That's the amount that you're capped at. It's actually the lesser of that amount, or 2.5 times your previous year income. So if you didn't make 100,000 or more last year, this example says, let's say it's 48,000 as an owner, you're capped at $10,000, which is basically you're dividing that 48,000 by 12 months times 2.5 times your monthly payroll. So that's something that I've gotten a lot of questions on. Here's the answer to it, and that should help as far as your calculation. It might be very impactful as to whether you use the 8 or the up to 24 week calculation. All these other items Sheryl pretty much addressed. Here's one thing that I don't know that was emphasized here. The lender has 60 days from the receipt of the application to issue it to the SBA. So you have up to, the business has up to 10 months to issue it to the bank to review. The bank, once they get it, only has 60 days to make a determination of it and then give it to the SBA. I don't know how long the SBA has. They have a period of time before they get back to you on that and have a final determination. So once you apply and you send it out, it's not a done deal at that time. You need to go and wait until the SBA has it as well, right? So they need to make the determination. They get back to you, then it's officially forgiven. Until then, on your records, on your accounting, it's really still a liability. And I'm going to talk about that, putting on my account's hat in a second, as far as some suggestions of how to treat that. So that's the highlights that I was going to touch on, but Sheryl covered quickly. I'm going to go to the actual form itself. Here is the easy form that you can download anywhere and everywhere right now, and you see it on top. It says 3508 EZ. What it has, this part looks all similar. They changed the stipulation from 75% to 60%, as was mentioned. And that's about it with the calculation. Then you're checking on, or you're initialing these things to make the representation that these things are in compliance. Not much change here other than 60%, or if it's 24 weeks, things of that nature change. But the essence of it really didn't change from the last time we went over it. And then this is demographic optional stuff, and that's it. So no Schedule A, no other additional schedules that you have to fill out. So again, if you fall within the stipulations of doing this, by all means, do the easy, because it'll just be that much less work, and you're busy doing other things, trying to get your business up and running again and competing in the market. You want to spend as little time as needed on this part for sure. All right, and then as far as the application, the 3508, here's the revised one. So you want to make sure that when you look at it, you have this part that says revised June 16th, which is only, you know, so a week ago. Here, the application, you want to use the right form, or else they'll kick it back, I'm sure. And it has the application. So I highlight a couple of things here. That's the 60%, which of course changed this clause here, mentioning that you have a 24-week as one of the options changed as well. You're still doing the initials here. And then here's that Schedule A. We went over this last meeting. I don't want to be redundant with it in the spirit of time. This could be time consuming going line by line with it. And the spreadsheet I'm going to show you in a minute, I think guides you through this just as well, or maybe easier. And you're going to fill out these boxes as indicated before, depending on what your actual compensation was during a period of time and the full-time equivalents, and then it'll compute the forgiveness part of it. If you have a problem with that, you want a professional look at it who does many of these. If this is the only one you're doing, and this is really important, you want to make sure that you get this right. So I would have another set of eyes looking at this for sure. Your accountant, some people are using their attorneys, whomever you're working with this, you want to make sure that another set of eyes touches this for sure. So here's the Schedule A worksheet. So it's not only a Schedule A, it's a Schedule A worksheet where you have to include this, or you could say see attached. Many payroll services are right on board with this, and they're giving you the forms that you need in this format. So this is all coming to light because the people who are doing the 8 weeks now are coming up on their 8-week timeline, the early ones, the people who got it early. So this is very important that these forms are now finalized and can be filled out as needed. So it doesn't matter if it's 8 weeks or up to 24 weeks, you're using these two possible forms, the easy or this one, all right, which is the revised 3508. Again, not much has changed here, so I won't be redundant. Okay, last thing I want to touch on is when I last shared this with you, it was version 4. This is our version 5. This is a spreadsheet that we developed more as a planning tool. Again, this was created long before the actual loan forgiveness application was finalized, and really just to help business owners see how they are in the process here. And this is the original one, which was the 8 weeks I went over the last time, where you can put in the payroll information here as it relates to if you're if you're under 100,000 or more than 100,000, and the different stipulations here to determine what percentage, and that changed to 60%. So we made that change here. This FTE here is still the same, which is looking at the period February 15th to June 30th and January versus February. Again, that still applies with the 8 weeks. That did not change. And again, the percentage here went from 60 to 40 here instead of 25. So you see that here on the revisions. And this particular example, they did not have enough. The loan was 147,000 based on the payroll of 108 and these other costs. They were only getting 129,000 forgiven. So you say stop, time out. Now you say we're going to abandon the 8 weeks. We're going to go to 24 weeks because we can't forgive it here. A lot of people were saying, well, I'm going to pay out my hazard pay and make sure I get it so that it's within that 8 week period. And again, if that makes good business sense, still do it. I'm not saying not to reward your employees or key employees there as far as what they've done to get you through this whole crisis here, but you're not so strapped that you have to do it by this set date or else you lose the loan forgiveness. You have more flexibility now to do that. And that's really what we want here. We want more options. So all these changes that came upon us, all very positive, giving you more options to do more planning. And that's really the takeaway I would suggest that you get from this. All right. So then we said a 24-week tab. Obviously, you're seeing a lot more weeks here. And again, if you put the date in which you received the funds, now if you got a second wave of funds, let's say if you're a seasonal business, you still put the initial date. You do not put that secondary date of where you got some additional funds. You're still working on that initial date. That'll compute the 24 weeks. You could put your information here. It'll compute how much your total payroll is, and then the non-payroll items mentioned, the rent, mortgage, interest, utilities, other interest on personal property is there as well, and it will compute it as well. And if you see that in this particular example, it is they're short $42,000. You now have more time to plan if you were to do a bonus here for that particular period. That would, I'm almost there, you only have a $2,000, and then if there's more expenses here, you can do your what if scenarios and kind of plan for that. So I think it's important to use a tool, whether it's this one or one you've created, or maybe there's other ones that you've seen on the internet, whatever the case may be. More so than ever, it's important to have a tool, because now it's a longer period of time that you have to plan. 8 weeks seemed like a long period of time. Well, 24 weeks is obviously is much longer to do planning. You're busy doing other things. You could easily lose track of time and these new changes. It might be fresh right now because it's less than a week old, but 2 weeks from now, if there hasn't been a lot of changes, you're busy and wrapped up in your business, you're not going to remember this. So it's always nice to refer to this so that your bookkeeper or your accountant, whoever is keeping track of this, could pull this up and get you right back to where you were on the process to know you've satisfied it. And again, what I think is critical, two things I just want to emphasize, and I'll wrap it up here, is that one, if you're an owner, the limitation under 8 weeks was $15,385, and now it's $20,833 is the number. So that's the additional amount of the owner's compensation that you can incorporate in this process. And that also, if it's up to 24 weeks. So if in week 12 you've satisfied it, wrap everything up, get the application there and going. And the reason that that's important, I don't really have a slide for this. This is just me kind of talking directly to you. The reason that's important is that when you're looking at your internal records here, right now, the SBA and the Treasury says it's a loan until we say it's forgiven. And that is true. But what's not crystal clear as far as the IRS is concerned is when the loan is forgiven, when is it effective? Is it effective the date they say it's forgiven? That's what's implied. Or is it effective retroactive to when the loan was initially made, which could be up to 24 weeks back? Or was it effective when you satisfied it, which might be, you know, week 8 or 12 or so of the time period? That's not crystal clear, and the IRS needs to clarify that with some people, because if you treat it now as a liability and you're incurring these expenses and your revenues aren't maybe quite where they were, and then all of a sudden that loan gets forgiveness and you have all that income at one shot, questions such as estimated tax payments, when should I have made it? Now am I in default in a penalty position with it? Those questions come up. What about if this straggles into next year and in 2021 it's determined? Well, you have all these costs in 2020 that you can deduct, and then in 2021 you have income. It would look kind of odd that you have it that way. So there's a lot of unaddressed issues, in my opinion, on the IRS side, not on Sheryl's side, not on the Treasury Department. I think the IRS has to clarify some of those, and they could be potentially big numbers. Also, the AICPA and generally accepted accounting principles have spoken about this, and they have a set of rules that are separate. So the financial statement rules could be different, and usually are, than the IRS rules, and they could be different from the SBA and the Treasury Department rules. So if you think it's a little crazy with the spreadsheet, imagine that there could be potentially 4 sets of rules as to the timing of the forgiveness. So it's important when you ask the question, it needs to be, what are you asking the question for and what are you using it for? If it's IRS, it seems like you have to include that as revenue when it's forgiven. The financial statements have it somewhat similar in that respect, but things are not quite set in stone as it relates to the IRS yet. So I want to just make you aware of that. I normally send updates when things of that magnitude change, so I'll be glad to update you on it. But that's real important to know that that's still kind of lingering out there. All right. That's it, Nina. I know there's probably some questions out there, so I'll stop there and we'll go. Be glad to answer any questions.
And actually, that was a great presentation, Lou. Very detailed. I wanted to just add one thing that I was thinking about that just kind of came out with a joint statement by the Treasury and the SBA administrator. And that has to do with, I was getting back to that theater question also, in that you're not fully open. So if you, let's say you don't spend the full amount, and I think that is a very good question. And actually in that statement, I'm just going to read it. And if you, let's see, hold on. If a borrower uses less than 60% of the whole loan amount, then when they apply for forgiveness, that portion that they're applying for forgiveness, so meaning both payroll and non-payroll, at least 60% of that has to be utilized for payroll to have the whole thing forgiven. So I think that's a little bit more clear than what I was stating before. The rules are continuing to be defined, and I just want to continue to make sure that I'm giving updated guidance. So I was actually reading the memo as Lou was giving the presentation to make sure that I was stating everything precisely. So. And I guess with that, maybe we'll take questions.
Sure, sounds good. Nina, do we have any raised hands?
No raised hands right now, John.
Okay, I'll get back to the chat as we do have some questions. I tried to filter them if they were already answered, so forgive me if anything's redundant, but not all that overly familiar with the subject matter. So from Lenny, it says, if a 1099 self-employed contractor receives a loan, how do they show the forgivable part of the loan? For example, if you got the max at $20,833, you can get the $15,385 forgiven. And do you have to show that you paid yourself that somehow? It says some 1099 employees don't have business checking accounts.
Yeah.
I can answer that, but why don't you go ahead, Lou? You're the accountant.
Yeah, well, Cheryl, we can compare notes here, compare answers here. So my understanding when it came out is no, there's no stipulation that he had to show evidence of spending that actual money there, as far as spending it on himself or taking distributions of that nature. It's automatically, it's based on the prior year's income there. So in that particular case, let's say they made over 100,000, so they get the full amount that exclude that that 20,833. The important so as far as reflecting it, you're not taking a deduction for it, so it's not income and it's not a deduction. So it's kind of an unusual situation as opposed to if it was a corporation, you spend it on employees and you have that situation. So he does not have to show that he spent it on himself, nor does he have to show it as a deduction. Cheryl?
Yep. I think the key here is that it's based on your 2019 tax returns, like what you reported. So that's why it's assumed that you spent the same amount.
Yeah.
Okay, thank you. From Amanda, it says, if you select the look back period, January 1st through February 29th, 2020, and you had voluntary, pre-COVID resignations during that period, are they included in your FTE comparison, or can they be excluded as they weren't reductions related to the virus?
I mean, you're utilizing your 2019 returns, so you don't have to exclude those people, but yeah, you don't have to. Anything else, Lou?
No, I agree with that.
Okay. Cindy had a question about the 8-week, 24-week period. I think we covered that, but Cindy, if you still need an answer, just send another quick chat that you want clarification. I think that was covered pretty well. I'm going to go down to.
The only,
pardon me?
John, I was just going to ask, the only confusion that I have heard about that, like when does that pay period start, is it starts either, it has to be dispersed, the loan, 10 days from when the loan was approved, and that's when the date starts. The only alternative to that is if an individual has a payroll period, like a bi-weekly payroll period, then the first day could start at that next pay period. So like, let's say it was supposed to start on a Thursday, but the payroll accounting starts the following Tuesday, you could start it on that Tuesday.
Okay. Thank you. Let's see here. Is a question, is there an ability to reapply for the PPP based on the payroll of the summer months for seasonal businesses?
So that period was, you could do that for a period there and reapply and get some additional funds. However, from a practical standpoint, many banks, which people initially got approved with, have closed out those programs. Now they had a window of time where they permitted them, and it varied by bank. So
Wait, no,
you want to check with your bank.
Let me add to that. Can you hear me?
Yeah.
Okay, so what actually happened is the additional increase could only be up until the lender did their first reporting on that PPP loan. So there was a window in which you were able to increase the loan based on seasonality if you were able to. So the current guidance does not make an exception. So if you do find that you were entitled to more money based on your seasonal business, then my suggestion would be to continuously look every day at treasury.gov, because guidance has changed over time, and perhaps a lender would be able to reopen that application and add the money, but you currently can't. A follow-up to that is do not pay the money back and try to get another PPP loan, because it's only one to a customer. It's tied to the EIN number and the Social Security number. So if you pay it back and try to get another loan based on that larger amount, you inadvertently locked yourself out. So please don't do that.
I think we've lost Sheryl audio-wise.
Looks like she muted herself.
She's back.
I'm
Can you hear
unmuted.
us,
Can you hear me? I can hear you.
Okay,
Yeah,
great.
she's back.
Okay.
Can you hear?
Thank
So
you.
were you able to get what I said?
Yeah, I think we did.
We got the good
Okay,
gist.
awesome.
Thank you.
Okay, that's cool. Sorry.
Let's see here. We have one that asks, are catch-ups for contribution to IRAs included in payroll forgiveness?
No.
Lou?
No.
Okay, thank you. Then from Tony, as a seasonal business that starts payroll with part-time staff mid-March, building to full-time, and loan origination starts April 24th, what period of 2019 is used for calculations?
I'll let Cheryl.
Yeah, there's a whole how to calculate. There's a link, and it'll give you the pay period that you can utilize. And if you're having questions, just shoot me an email and I'll send you the link. It's just a very specific question.
Okay. If you want to put your email up in the chat, that would be great. I think we might have said that.
Yeah.
Just to circle back to an earlier question, just to confirm, it says under Lou's sheet, it says no cliff, but 60% must be spent on payroll. If not, none is forgiven. You get a clarification?
The clarification was kind of what I just stated with that lower amount. So it's a quasi cliff, if you will.
Yeah, but there's no.
Right,
I think what they were alluded to, Cheryl clarified in the when she gave her portion, which was that before it was thought in the initial draft that if you didn't hit that 60%, none of the loan would be forgiven. That's the cliff I think that person's alluding to. Cheryl clarified it that, and that was clarified less than a week ago, that if you don't hit 60%, I think she used the example, if you hit 55%, you still have a forgiveness there up to that 55%. It's not zero. That's what people were fearing, and that got clarified a couple of days ago as a special clarification. That's what Cheryl alluded to initially.
Thank you.
Let's see. It says here, if we are relying on the 630 safe harbor to restore furloughed staff, the easy form is not applicable. Is that correct?
Correct.
Okay.
Yes.
And then we have, if you receive the EDL grant and loan after the submission of the PPP forgiveness, what happens then? Would the forgiveness need to be revised?
No, as long as you're not double dipping, which means, first of all, your EIDL advance does not have to be forgiven at all. So if you received an EIDL advance, that's yours. But regarding the EIDL loan, as long as you don't use it for payroll in the same period as you're utilizing the PPP loan, you can have both. One does not reduce the other. However, if you are using them for the same thing simultaneously, that's when you're double dipping. And my suggestion would be to use the PPP first and then utilize the EIDL loan proceeds, and you're really keeping it clean for auditing purposes. Lou, do you want to add anything to that?
No, I agree. I think I read a little more into the question that they were asking, that 10,000 or up to 10,000 EIDL advance. How does that work with the forgiveness calculation? I've gotten kind of a variation of that question as well with it. And as you mentioned, that is an advance that does not need to be repaid.
Yeah,
Correct.
so there has been,
Okay.
yes, and there's been confusion because the original borrower application did have language that inferred that it would be subtracted from what the PPP would be given. However, an SBA notice that came out last week clarified that was not the case. So hopefully that clears up that confusion. And there's
Yeah,
also a new PPP application.
Yeah, and I think in the actual application, it excludes that. So to further clarify that, before it reduced the amount of that was to be forgiven, and that's not the case anymore. And that's a very recent question there. But it doesn't come into play. You get that up to 10,000. I think it's 1,000 per employee, up to 10,000. That's yours. You don't. It doesn't have to be. It doesn't have to reduce what you're forgiven in the calculation. But the other question I think was if you get the money after you've done the forgiveness application, can you update the application? I would think yes. If you need to include information that they're asking for in the application, if you get not the advance but the actual loan, then you should update it with any additional information. But my sense is with the timing of things, whatever you've gotten there should be known by the time you put in the application.
Okay. Thank you. I think that's all the questions we have in the chat. Thank you so much for elaborating. And I think Nina has a raised hand question. Go ahead, Nina.
Yes, our question comes from Gina. Gina, I just clicked to let you unmute whenever you're ready.
Hi, yeah, Sheryl, thank you so much. So similar to the theater, I have an immune system, and surprisingly, yesterday when the governor said that casinos could open July 2nd, he didn't give us any guidance at all. I thought that we were, hand in hand with them. So, looks like it's going to be maybe the middle of July. No idea at all when we can open. So the theater probably has, year-round that they've furloughed, but I would have normally opened at Easter or sometime in March. So I've already lost the employees that I had interviewed. We don't put anybody on unemployment in winter. So I've already lost them because they went to work for people are open already. And my foreign workers now, as of yesterday, they're definitely not going to be able to, J1 visa people are not going to be able to come. So a rock and a hard place, not knowing when I can open. And right now I did employ a young boy for 25 hours, just giving him, and then he left. And so I'm trying to interview and they want to start working right away. Do you have any advice for me?
I guess I don't first of all, I'm sorry to hear that.
Yeah.
But second of all, I'm assuming that you did not get a PPP loan?
I haven't applied yet because until they just changed it to 24 weeks, knowing that I would have to get back, not.
Yeah. Okay. So two things. One is you have till June 30th to apply. So if you find you're eligible, I would apply. I do want to mention that foreign workers are not included in the calculation. The PPP is intended for employees that are U.S. principal based, and it's really intended as a stopgap for U.S. citizens. But if you have other employees that were paid in 2019, I think what you're going to have to do is apply by June 30th, or you will not have the money, and just you have 24 weeks from when it's dispersed to utilize it. So hopefully you will be able to utilize that money.
Yeah.
Also, go to the NJEDA. There are other programs that are available through the NJEDA website on a state basis versus federal.
And do they have an expiration of June 30th as well?
No, they do not. They're just ramping up their program.
Okay, thank you.
Okay, I think that wraps up all of our questions. So we're right around 11 o'clock. Just want to say on behalf of the Chamber, thanks so much for all the participants for coming on with us today. That's some great information. If you need to go back and review, I think we'll be on Facebook with the recording for a while, and also the King County Chamber YouTube channel. probably at some point in the near future. It'll be up there. But you can always reach out to the chamber if you had any questions. We'll always try to help get you the answers that you need. So again, thanks everyone, and thanks to our sponsor, Burke Motor Group. If you're in the market for a car, I would highly recommend swinging by their lot. They got some great vehicles and some great offers. And again, we hope everyone has a great day, and we hope to see you again soon. Thanks so much.
Great. Thank you.
Great. Thank you.